Stop thinking every AI deal is good for both companies. Seriously, if you own Meta stock right now and you're celebrating this Amazon deal, you are making a dangerous mistake. Here is the counterintuitive truth that Wall Street understands, but retail investors completely miss. One company's partnership is another company's expense. Meta just signed a multi-billion-dollar, multi-year deal with Amazon for Graviton 5 processors. Tens of millions of cores on AWS. Sounds bullish for both, right? Wrong. This deal is a gold mine for Amazon and a necessary cost for Meta. And if you don't understand the difference, you will buy the wrong stock at the wrong time. Let me break down exactly why. And stay until the end for the 3 secrets that will change how you evaluate every AI partnership from now on. I'll admit something. Early in my investing journey, I saw a big partnership announcement. 2 major companies. Huge headlines. I bought both stocks. One went up 40%. The other went nowhere for 2 years. I learned a painful lesson. A partnership is not a rising tide that lifts all boats. Sometimes one company is the seller. The other is the buyer. The seller gets revenue. The buyer gets a bill. Today, I'm going to show you exactly why this Meta-Amazon deal is not what it appears to be. We're going to break down the numbers, the strategy, the winners, the losers, and by the end, you'll know exactly what to do with your Meta and Amazon shares. Stay with me. Let's start with the facts. What happened? Meta signed a multi-billion-dollar, multi-year deal to use Amazon's Graviton 5 processors on AWS. Meta will run tens of millions of cores on Amazon's infrastructure. Why did Meta do this? 2 reasons. First, Meta is expanding its AI systems rapidly. They need massive computing power. Second, Meta wants to diversify its compute sources. Here's what most people don't understand. Most people think AI only runs on GPUs from Nvidia. That is changing. CPUs like Amazon's Graviton 5 are becoming essential for AI deployment, not just training models, but actually running them at scale. The counterintuitive truth? Meta is not buying chips. Meta is renting computing power from a competitor. And that competitor? Amazon. So who wins? Let's look at each stock separately. Let's start with the clear winner, Amazon, ticker AMZN. This deal is unquestionably positive for Amazon. Here is why. 1. A massive cloud customer just committed to AWS. Meta is not a small customer. Meta is one of the largest technology companies on Earth. When Meta chooses AWS for tens of millions of cores, other companies notice. 2. Amazon's chip strategy just got validated. Amazon has been building custom chips for years. Graviton, Trainium, Inferentia. The market was skeptical. Can Amazon really compete with Nvidia and Intel? Meta just answered that question with a multi-billion-dollar check. 3. Direct revenue. Every core Meta runs on AWS generates revenue for Amazon, not next year. Now. This deal goes straight to Amazon's bottom line. The counterintuitive truth? Most investors think Nvidia when they think AI chips. But Amazon is quietly building a chip business that could be worth tens of billions. Can you buy Amazon? I cannot give personal advice. But the facts are clear. This deal validates Amazon's chip strategy. It brings direct revenue, and it positions AWS as an AI infrastructure leader. If you believe in cloud growth, this is a data point in Amazon's favor. Now let's talk about the stock everyone is confused about, Meta. Ticker, Meta. This is where the counterintuitive truth really matters. On the surface, Meta is expanding AI capabilities. That sounds good, right? But look deeper. Meta is spending billions of dollars on infrastructure, and this deal is part of that spending. Here is the reality. Short term, this is a cost. Meta's AI infrastructure spending is putting pressure on margins. Every dollar spent on Graviton 5 cores is a dollar not going to profit. The company is already doing layoffs, already cutting costs, and now they are spending billions on Amazon. The mixed reality is this. Yes, This spending is necessary for Meta's future. Without AI infrastructure, Meta cannot compete. But necessary spending is still spending. For short-term traders, there will be volatility. Every time Meta reports earnings, analysts will ask about AI spending. Every time Meta guides lower on margins, the stock will drop. For long-term holders, the thesis is different. If you believe AI will make Meta more efficient over 3 to 5 years, then this spending is an investment. The counterintuitive truth: Meta is paying Amazon to build Meta's future. That is not a bad thing, but it is a cost thing. Can you buy Meta? The facts: this deal is neutral to slightly positive for Meta's long-term capabilities. But short-term margin pressure is real. New buyers might want to wait until the layoffs and AI spending impact is clear. Current holders? The long-term AI growth story is still intact. Let me make this extremely simple. Amazon's position: direct revenue, customer validation, chip strategy vindicated, all positive. Meta's position: necessary spending, margin pressure, long-term capability. So it's mixed. The bottom line is, this deal is more positive for Amazon than it is for Meta. Not because Meta is doing something wrong, but because the structure of the deal favors the seller. Here is what I mean. Every dollar Meta spends on AWS becomes $1 of revenue for Amazon. That is not opinion, that is accounting. If you already hold both stocks, holding both is reasonable if you believe in long-term AI growth. Meta needs the infrastructure, Amazon provides it. If you are considering a new buy, Amazon has a stronger case based on this deal alone. Meta's case depends on what they build with that infrastructure, not the infrastructure itself. The counterintuitive truth? The best AI investments are often the picks and shovels, not the miners. Amazon sells the picks, Graviton 5. Meta uses them to dig. Both can win, but one wins more directly. Let me leave you with the 3 secrets that connect everything we just discussed. Secret number 1: the revenue versus cost illusion. When you see a partnership announcement, ask one question: who is paying whom? If your stock is the seller, like Amazon, celebrate. If your stock is the buyer, like Meta, be careful. The market often celebrates partnerships without looking at the cash flow direction. Secret number 2: the validation premium. When a smart, large customer chooses a product, that product gains value. Meta choosing Graviton 5 tells the entire market that Amazon's chips are real. Other customers will follow. That validation is invisible, but it is incredibly valuable for Amazon stock. Secret number 3: the time horizon trap. Short-term traders and long-term investors should see this deal differently. Short-term, Meta's margins take a hit. Amazon's revenue gets a boost. Long-term, both companies could win if AI grows as expected. The trap is mixing the 2 time horizons. Know your timeline before you trade. So what should you actually do with this information? If you own Amazon, ticker AMZN, this deal is confirmation that your chip strategy is working. AWS cloud growth is accelerating. Hold with confidence and monitor cloud revenue trends each quarter. If you own Meta, ticker Meta, this deal is a cost, but it's a necessary cost for AI capability. Do not panic sell, but do watch margins. The real test is whether AI spending leads to AI efficiency. If you own neither and want to buy, Amazon has a clearer near-term catalyst. Meta requires more patience and tolerance for volatility. The counterintuitive truth? The best time to research a stock is before a deal is announced. But the second best time? Right now. Do not chase, do not panic, just understand who is paying and who is getting paid. Here is my question for you. Do you own Meta, Amazon, both, or neither? And based on what you learned today, would you buy Amazon before Meta? Drop your answer in the comments. I read every single one. Like and subscribe if you want more myth-busting financial analysis on AI stocks. I'll see you in the next video.